Ramesh Kumar, Sukija Accounts Teachings. Difference between receipts and payments account and income and expenditure account. Now first we are taking basis of distinctions. One is nature, other is items, third capital and revenue, fourth outstanding items, fifth balance sheet of an account, sixth balance sheet, 7 carrying on balance, 8th commencement. Now first is nature. Receipts and payment account is the same as cash book. On debit side we show all the receipts and on credit side we show all the payments. Now income and expenditure account is the same as trading profit and loss account. On its debit side we show expenditure, on credit side we show incomes. Because the normal principle is debit all expenses and losses and credit all incomes and gains. Number 2. Items. In receipts and payments account, in the beginning we show opening balance, to balance BD, cash or bank, and at the end of the period we have closing balance, that is balance CD, cash or bank. In income and expenditure account we show all expenses and incomes. The third, capital and revenue. In receipts and payments account, we show whether it is capital received or revenue received. And similarly, we show capital payments and revenue payments. What do you mean by capital payments? That if we have paid for some fixed assets or we have some special donations, so they are capital receipts. And capital payments if we have purchased some fixed assets or we have made some donations in large amounts. In income expenditure account, we show only revenue expenditure and incomes. That is, which are concerning to expenses and incomes. Fourth, outstanding items. In cash book, we do not consider this, whereas in income and expenditure, they are considered on both sides as expenses and incomes. If there are outstanding, they are added. If they are prepaid, they are subtracted. Now fifth, balance of an account. Receipts and payments account starts with opening balance as balance BD and ends with closing balance as balance CD. Whereas income and expenditure account only show at the end surplus or deficit. If income side is more, the firm has surplus. If expenditure side is more, the firm has deficit. Now balance sheet. Generally not followed with balance sheet. Receipts and payment account is not generally followed with balance sheet, whereas income expenditure account is normally followed with balance sheet. Carrying on balance. In receipts and payments account, closing balance is forwarded to the next period. As to balance BD. Now in income and expenditure account, surplus is added to the capital reserve, and deficit is subtracted from it. Next is commencement. Receipts and payment account normally has opening and closing balance. And income and expenditure account at the end of the period, it has either surplus or deficit. If you like this video, kindly like, share and subscribe it. Thank you very much.